Hello, welcome to the European Open briefing for Thursday, January the 19th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So the main headlines this morning are we had a speech by Janet Yellen yesterday, and she sounded rather more hawkish than usual, and that boosted the US dollar. We're seeing a much weaker Canadian dollar today, and that follows some comments after the Bank of Canada's governor, who kept open the possibility of a rate cut. We also had Australian jobs data out this morning, which did provide a bit of a boost to the Australian dollar. And we've got the European Central Bank meeting coming up later in the day, as well as a speech by British Prime Minister Theresa May, and the euro and sterling are both steady ahead of those events. So let's start with the dollar-yen pair. We can see here that although the dollar had started its rebound late on Tuesday, it did receive quite a bit of a boost once Yellen started a speech in San Francisco. She did say that waiting too long to begin moving towards the neutral rate could risk a nasty surprise down the road. So that's pretty much in line with what she said previously, the fact that the Fed needs to act early to avoid raising rates too quickly later. Although she was more hawkish when she said that it would make sense to raise rates a few times a year through 2019, and the Fed appears to be aiming to raise rates to around 3%. And that's a more clearer signal as to where the Fed sees rates in the coming years than what we've heard from Fed officials previously. Yellen didn't really mention much on Donald Trump. She just said that the Fed will closely follow any changes to fiscal policy. But for the time being, we're seeing the dollar approach the 115 yen level as a result of those remarks. If we move on to the Canadian dollar now, we can see here we have the bit of a firming in the loonie when the Bank of Canada announced its decision to hold rates at 0.5% yesterday. And its statement was fairly neutral. In fact, the Bank of Canada revised up its growth forecast for 2017 slightly. However, we did have the press conference an hour later, where Governor Stephen Poloz said that the Bank of Canada is still open to cutting rates, said that the rate cut remains on the table, and potentially that's down to protectionist policies on trade by Donald Trump. So if Trump was to restrict trade between the US and Canada, which would inevitably hurt the Canadian economic growth, so that could potentially lead to a rate cut by the bank. And also the Canadian dollar has been appreciating over the past year, and that's holding back export growth for Canada. So that's another factor that Poloz attributed to yesterday. So the loonie at the moment is trading around 1.3268 per US dollar. Let's move on to another commodity currency. Here we have the Australian dollar versus the US dollar. The Australian dollar did rise to 2 months high a couple of days ago, but it's since fallen back as the US dollar has started to go back up again. We had fairly positive US jobs data out of Australia this morning. The Australian economy added 13,500 jobs in December, beating estimates of 10,000. We also saw that full-time jobs rose for the third consecutive month. Full-time jobs is the main weakness in Australia's labour market, because majority of the job creation has been to part-time jobs recently, and that's hiding the fact that even though the unemployment rate is not too bad at 5.8%, it's been fluctuating around 5.6 to 5.8% over the past year. In fact, that's mostly been down to full part-time jobs, which is a sign of weakness in the job market. Although in the past 3 months, full-time jobs have been going up, so we saw the Australian dollar go back up to 0.75 level this morning after that data. Let's move on to the euro and the pound because we have two key risk events coming up later in the day. The euro has comfortably held above the $1.06 level. We do have even though the dollar has bounced back, we have the ECB meeting later in the day. That's going to be the ECB's first meeting in 2017. We're unlikely to see any changes in monetary policy, although we'll likely see some questions around a possible tapering of the quantitative easing program of the ECB when Mario Draghi holds his press conference. So that would likely attract investors' attention later in the day. And as far as the pound is concerned, the pound did briefly fall back to 1.23 level. It's currently trading near that level. We have the UK Prime Minister. She's going to give another speech. Of course, we had that speech on Tuesday on Brexit, which led to the pound surging by 3%. She will be speaking in Switzerland in Davos at the World Economic Forum, where she will likely try to reassure business leaders that the UK economy remains open to business. And there's a lot of attention at the moment on May because HSBC, which is the largest UK bank, announced that it is to move around 1,000 staff from its London office to Paris due to the UK leaving the single market. That obviously adds some pressure on May to try to reassure the financial services companies that the UK remains an attractive place to do business once it leaves the EU. So we could see some further volatility for the pound down the road. If we move on to gold now, we can see gold has moved away from its recent highs around 1,218. It's currently it did briefly dip below 1,200, currently trading just above that level. So that slide reflects an improvement in overall risk sentiment, but of course we do have Donald Trump's inauguration as US president tomorrow, so that might lead to some it will likely mean that we should see ongoing demand for safe havens. As we know, there's quite a lot of uncertainty surrounding Donald Trump's presidency and his economic policies. Before we go, let's have a quick look at today's economic calendar. On top, we can see those US inflation numbers out yesterday, which were more or less in line with expectations, so they didn't have too much of an impact on the markets. We can also see the Bank of Canada's rate decision. Today, we had the jobs data out of Australia, of course. Coming up later, we do have the ECB meeting. The deposit rate is expected to stay unchanged at minus 0.4%. And then we've got some US data, which will include the weekly jobless claims and the Philadelphia Fed business index later as well. That's it from me. Thank you very much for watching and have a great day.